Up until the beginning of World War One, of course, the mark was as good as gold, but unfortunately, wars push countries into going off gold or cheating their citizens and paying them with paper. And yeah, it took a while for the paper mark to really get trashed. And of course, this is in terms of how many ounces you can get for a gold mark. And you can see that up until the middle of 2022, it wasn't that bad. I mean, we went from somewhere around one to around 100. And you might think, well, that's a lot, 100 times. But don't forget, we've gone from 35 in 1971 to now over 4,000. That's like 100. I know it's been over a longer period of time. But yeah, it's similar. It's very similar. It's a matter of fractals. What is this fiat currency apocalypse? Well, apocalypse means the unmasking, really. It's not really the end of the world. Some people think apocalypse is the end of the world, but the Greek translation is to unmask. And I think this is what's happening with the price of gold. It's the unmasking of everything going to zero, the dollar, fiat dollar included. And this chart is a interesting chart because it's the USD XAU, and it's how many grams of gold you can buy for $1. Usually we look at it as XAU USD, which is how many fiat dollars you can get for an ounce. So this chart is a lot more indicative of what's going on. We keep worrying about the price of gold, right? What we should worry about is the price of the dollar, and that the fact that we can barely get well, we can't even get point zero 0.01 gram. We used to be able to get almost we used to be able to get 3/4 of a gram prior to August 15th, 1971. Yeah, and I've put the date here from August 15th. You can go on this website, fxtop.com, and play around with it. There's loads of data there. But as you can see, the change since August 15th has been 99%. Yes, the dollar has gone down 99% versus versus gold, versus real money.
When we talk about the price of gold, the more meaningful measure is what $1 buys in gold rather than what gold sells for in dollars. Since the U.S. went off the gold convertibility standard in 1971, the dollar has lost a very large share of its purchasing power versus gold. This trend suggests the real issue isn't the gold price rallying so much as the currency weakening. Many currencies globally show similar decline, indicating the dollar is not alone in this unmasking process.
And the chart is even the line that measures the dollar here is going almost off the charts, but to the downside. I think what we will see is an apocalypse. People are going to realize that these fiat currencies are worthless, and they will want gold. And I think the central banks know that already, and the very wealthy, and that's why they're buying physical gold and silver hand over fist. So this is not just a dollar thing. So we'll go step into the realm of the euro. And I guess they can do the euro back to 71 because the euro is just a basket of the old legacy currencies that were fixed at a certain rate in 1998 or 99. I'm not too sure what year it was, but it was thereabouts. So the euro hasn't done much better. It's down 99%. I would say, though, if you looked at the Deutschmark separately, it would be down a little less. So all the other currencies have diluted the Deutschmark, but it's the same story here with the euro. And many people think the euro is going to collapse first. I don't know, or the yen, but I think in the end of the day, it doesn't matter which one collapses first or last. The thing that you need to have is gold and silver. And we're going to look at a chart of silver for the US as well. So this is the British pound. It's the same story, down 99%.
It's not just the dollar. Other major currencies, the euro, the British pound, the yen, have experienced dramatic long-term erosion relative to hard assets. Some have declined in value by 90 to 99% when measured against gold or equivalent benchmarks. In emerging markets, the situation is even more extreme. Local currencies have collapsed or become effectively worthless in real terms. In short, the global fiat currency system is showing cracks, and the spread of the weakness amplifies the risk of broad monetary transformation.
Japanese yen actually is down 97%. So, yeah, it's got a little bit of catching up to do on the downside. So, yeah, it's the trade of losers, right? You sell the yen because you think it's going to drop a little further to catch up with the other losers. So there you go. That's the yen. Now the Swiss franc. Well, the Swiss franc. That's why the Swiss franc is considered a safe haven fiat currency. It's because it's down only 95%. So again, not the place to be in terms of your savings. Of course, we all have expenses, not just household expenses to cover, also small businesses, and businesses need fiat currency to function. I'm not saying you have to get out of everything, but it's if you don't need a certain amount of fiat currency, if you've covered all your like prospective expenses, uh, yeah, I wouldn't be holding it. Canadian dollar is the same story, 99. Aussie dollar, 99. Singapore dollar is a bit like the Swiss franc of the Far East, I guess. It's down 97. Actually, it's just like the yen. The yen is down 97. So interesting.
As fiat currencies falter, the traditional role of gold and silver emerges again. Gold, in particular, has been regarded throughout history as a store of value when currencies lose credibility. With rising debt levels, inflation pressures, and central bank balance sheet expansion, investors and even nations are renewing interest in hard asset hedges. Financial commentary notes that a return, or at least a shift toward commodity-backed or hybrid monetary frameworks, may be underway.
Well, here I have the Indian rupee. According to this chart, it's down 100%. Is it any wonder that the RBI is now accepting silver as collateral for loans and gold? For all intents and purposes, the Indian rupee is toast. And the same thing goes, believe it or not, for the Chinese yuan. It's down 100%. Is it any wonder that the Chinese leadership has encouraged or is encouraging its citizens to buy gold and silver because they know their currency and all other fiat currencies are nothing but toilet paper, even worse than toilet paper, I would say. So let's go and look at how. I'm going to go through the process here so you can do it yourself. I'll show you how it works. So you scroll down here and you click on historical rates graph. You get rid of this ad. Unfortunately, there's a lot of ads. And you take United States dollar and you scroll down to X. Around X, you've got XAG. And you select the date, 15th of August. Here we go. And the year, 1971. To today, October. So we scroll down Yes, silver has underperformed, but still, the dollar's down 97% versus silver. So there you go. I'll stop sharing now. What else did I want to cover today? Yeah, another chart that I wanted to cover today is this one, and I've been showing this for a while now, and I call it a disturbing resemblance. I'm gonna try to make it bigger here, and the chart on the left is the value of one gold mark, the coin gold mark in paper marks, and
Graphs comparing fiat currencies versus gold often mirror older episodes of collapse, such as the German paper mark after World War I. Many analysts draw parallels between those historical breakdowns and present trends in modern fiat systems. The logic: once confidence fades and money supply expands uncontrollably, the value of the currency tends towards zero, and the only real reference point becomes something tangible, a gram of gold, for example. Patterns repeat, even if the timing differs.
up until the beginning of World War One, of course, the mark was as good as gold, but unfortunately, wars push countries into going off gold or cheating their citizens and paying them with paper. And yeah, it took a while for the paper mark to really get trashed. And of course, this is in terms of how many ounces you can get for a gold mark. And you can see that up until the middle of 2022, it wasn't that bad. I mean, we went from somewhere around one to around 100. And you might think, well, that's a lot, 100 times. But don't forget, we've gone from 35 in 1971 to now over 4,000. That's like 100. I know it's been over a longer period of time, but yeah, it's similar. It's very similar. It's a matter of fractals. So you can see that a few years ago, I noticed that these charts look very similar, and this is the United States fiat dollars per troy ounce of gold, right? And with the beginning of the century, it looks very much like after World War One, when gold started going up in paper marks. Same things happening in paper dollars, and we had a consolidation for about 10 years here, painful, but now it's broken out, just like the paper mark, yeah, the gold mark broke out back in the middle of 2022. And it was very quick after that. And this is a monthly chart, and so is the one on the right.
So, what should individuals or businesses do? First, recognize that if you don't need a portion of your holdings in fiat currencies for daily operations, holding large amounts purely in weak fiat may carry risk. Second, consider incremental exposure to assets that are less dependent on currency confidence: physical metals, real assets, diversified stores of value. Third, stay informed, because a shift to a new monetary framework, whether commodity-backed, regional, or digital, is possible. In short, the future may not be about if things change, but when and how prepared you are.
So it doesn't show all the volatility, but what it shows is the direction of travel. And the direction of travel is towards infinity. I suspect we're not going to get to 1 quadrillion gold price. By then, the whole system will have to be, well, a new system will have to be brought in, and that system will be a gold and silver based or backed system, in my opinion. It's not going to be cryptos, stable coins, or bitcoins. I think stable coins are an attempt by the US administration to replace the petrodollar, because the petrodollar is finished. But the main difference between the two, a stable coin dollar and the petrodollar, is that the petrodollar worked because it was based on something that we still need, and that's energy. Do we really need stable coins? Not really. So I think it's dead in the water. The biggest risk out there is having fiat currency. And is there a way out of this? Well, the only way out is to go into a new system, because this system, it's impossible now to reverse it, because we've got so much debt in the system. We've become so dependent on debt that if we try to reverse it, is going to be a major major crisis. It's going to be chaotic. And not that going into a new system won't be chaotic, but I think if we let this continue, it's going to be even worse. So I think we're very close to where the powers that be realize we need to, you know, put an end to this fiat dollar system and go into something better. On a personal basis, I wouldn't really be concerned or worried, because it should always be, in my opinion, on a gold and silver standard personally, i.e., have some in your possession or in a private vault that you trust.